Hey, how's it going, everyone? Welcome. Let me know if you can hear my voice. You should be able to receive audio now. I'm live and everything should be good to go. Perfect. How's it going, Tom? Great to see you. Howdy, Ray, everyone. Great to see you all this afternoon. Welcome to the PivotBoss Premium Trading Room. I'm Frank Ochoa, aka PivotBoss, and every Friday here for the last little while here, we've been trying to get together just at the close here, just to see what we can kind of get a glimpse of for the upcoming week with regards to the markets and any potential direction we see or what the event may be. And then we try to do a little bit of scans here in terms of finding some stocks that have been working out in our favor and see if we can find any new issues that could be turning around for us in the upcoming week with the market or whatever happens. So what we're going to do is kind of look at the market here for a moment, just see how things closed off. I'm going to start from a higher time frame and just do a quick look at each of the markets here as we come into basically the close here. And you can see ES continues to chop around, and this is what we talked about last week. Last Friday really was that, this thing was in a zone here where it's going to potentially continue to widen out this range as it trades around the HVN. And what we did here was basically see price push higher, Tuesday, Wednesday, and then Thursday, Friday here held on highs and sat just above the previous week's high, 2071.5. That was an area that was defended throughout the day over the last two sessions. So this is going to be very important here. You got clearly bulls here positioned above the zone, not really getting paid just yet. So if the stops come out below 71.5, we could be rotating all the way back against this range in the upcoming week, because that's exactly what we expected. If we're going to reject down here and rally back toward an HVN where the market can do business, then the market's going to do business, right? So, I've been looking for a potential high up here to find and kind of pivot on to see where we could go, but we haven't really seen that emphatic high. Instead, what we're seeing is just kind of a hold above these previous week's high here. We got a very narrow day, inside day, where the current range fell inside the range from the previous session. So an inside day pattern after a big move up. That tells you right there prices are clearly coiled up here. And again, if these bulls don't get paid, their sell stops will spark a move right back down against this range in the upcoming week. So that's a couple of things that I'll be looking for here in the upcoming week. How does this thing respond around the previous week's high? And if we do break below it, how far down do we go? And we'll be looking at that ahead. And on an intraday basis, here's the ES on the intraday. One thing we were looking for today was an early bounce after the open, or heading into the open and after. We were looking for an early bounce into 77s. And I mentioned pre-market that 77s was a zone to defend for a shot at seeing a potential push into and through the previous week's high, for a shot at breaking that zone. And we saw the nice push up. We saw perfect rejection down off of it. And then we studied this area in the trading room here and watched as it perfectly moved off of our analysis here. Basically, price just kind of sat here on the previous session's low, previous session's high. It ticked down and basically retested the overnight low just for a fraction of a second, and then bounced right back above those key pivots. And from there, we knew the squeeze was likely going to take us right back up. And from there, we kind of negotiated our way around it. But overall, this thing, on the way back up, we were looking for another round of weakness, perhaps even better at 77s, but it just kind of got shy of that area and then tried new lows. Once it pushed through new lows here, you can see the initial wave down came into this leg here. When the price pulled back right here, they defended, and then they tried to gun it downward. And then you can see right there that failed lower low. That failed lower low is all you need to know to forecast a reversal right back to value, because this is rejection, and down here where there's rejection, you usually see a return to value. And that's what happened right here. Perfect tests. And then basically just ran into 5-day VPOC just now. So value here, and we're pretty much done on the day. So that's kind of how it finished out. One thing I talked about early on was how, let's take these off and these off, how prices are holding up here on these highs. And you can see there's a little bit of a rounded off pattern here coming in to play, right? Anytime you see that, again, I talked about this a lot this year because we've seen a lot of rounded patterns, both at tops and bottoms. These work out really, really well most of the time. And, there's inherent psychology in this pattern that just leads to significant results most of the time. This is the key level, 77.5, right? If price pushes through that level and sees acceptance, the squeeze is likely on. But right now, there's been rejections above that zone. Here was a rejection. Then they tried to hold above it and failed. They came back, and that's where it rejected off of here. And then since then, they stayed below. So this type of topping pattern right here lends itself to a potential retracement of this magnitude back toward the recent leg down. So we could be looking at a push back against the range, just as I mentioned before. And these lows are going to be very important because there's clear air right back down, perhaps into 1240, 1234, or even lower. So we'll see how that plays out as we head into the upcoming week. So looking at that ES analysis and kind of piggybacking off of it with the NQ, very similar as well. This one was perhaps the most pronounced failed rejection that we saw this week. Failed range expansion, that rejection basically. So here was the bottom of the weekly range that we were coming into. Price traded below it, hit the 25% PB pivot, and then rallied the opposite way. And this all happened at first we were looking for some sort of weakness from here down, but the market failed to rally into that level after the open and instead pushed for lows first. And that's key, because when you push for the lows first and reject, then all of the stops up here become at risk, and that's when the stops were on. And you see what happened over the next couple of days. But now that we're seeing a little bit of a rejection on these highs, it appears that this thing could be likely headed right back down as we develop this range and continue to build it out. So right now, the previous week's highs right here, we just kind of held on that level and chopped around it. 45.23 short term is going to be important. Bulls trying to hold it here. A failure to hold that level, I think, drops this thing right back into the recent LVN at 44.41. So that's the early idea right there with the NQ as we head into the upcoming week. Now, obviously, this thing continues to trend higher. So the trend is not yet broken. I just want to make that real clear. I'm still in the camp that pullbacks should be bought until proven otherwise. This trend has been relentless to the upside. All pullbacks early in the week have been leading to late week reversals the entire time. It's just the way it's been. So in order for this thing to really change, I would say that any push below 4,400 in this zone, below this pivot here, or acceptance, really 43.55. I mean, that's really the big time level. So again, there's so many different zones down here where bulls could defend and still be bullish, even if we do see a big sell-off toward this level. I think this 43.55 is really a bigger level here where if you push and hold below there, then you might be marking back down toward 40.76. But for right now, I think we hold near these highs, and I think we continue to kind of trade back and forth until proven otherwise. But pullback's still an idea for new highs until we kind of top out. We haven't really topped out just yet either. So there's a little bit more to go here, a little more cooking in the oven before we actually see some sort of reversal. But right now we could be transitioning from a markup phase to a distribution phase, and that's kind of what's happening now. On an intraday basis for the NQ, let's take a look at that here. This one played out a little better than the ES did to begin the day. Obviously, we had early weakness, but right here after the open, and price dropped, hit the lows, came back up. And early on, what we were talking about pre-market was the 55.50 level, and then the trading room basically between 55.50 and 55.55. So any push into that area was going to be a defense opportunity for a push downward. And so we got our call there. I mean, price rallied right into 45.50 on the first try, pulled back, tried again and rejected, pulled back, lower high off the IBH, the initial balance high, and from there dropped downward. Very similar to the ES right here. Failed lower low and snapped back to value. I mean, that's a high probability trade right there every single time. And again, when you use tools like the PivotBoss Oscillator, oftentimes you have a ready-made divergence just built into that chart. Look at this divergence. Here's a low, and the low is right there. And then here's a low, and the low is right there. So lower lows on the price, higher lows on the oscillator. Inherently, that tells you that price is stronger than is letting on for the most part, and that's when you usually see a move right back up, back to value. So that's a great way to confirm your trade almost every single time when you're looking for those failed higher highs or failed lower lows. The same thing can be done on the top side up here, where you saw this high and then this failed new high, and then you look down here and it's a divergence as well, with a lower low on the oscillator, again telling you that prices are inherently weaker than the chart is actually letting on. So two perfect, picture perfect tops and bottoms there, but very, very nice the way that's played out. Thank you, Tom. This thing will be recorded anyways, but that's a nice little section to break out. But this is really, really nice. I mean, you'll probably actually see this example in the PivotBoss PIMA method that we in a few weeks when we do the master's training, because this is just great. I mean, the way it played out. So I just wanted to bring a couple of those things here to the forefront here, just so you can study them on your own as well. You know, because looking for highs and lows and tops and bottoms, I mean, sometimes on a day like where you're expecting some sort of range activity, you know, we were expecting that after the major squeeze up, we were looking for some sort of back and forth to occur. And usually when that happens, you can get these type of opportunities much more often during these markets, because then you're looking to fade new highs, fade new lows, because the market's mostly in a trading range state. That's what happens, right? It's not always a perfect horizontal line, right? It's not just perfect this. That's not, I mean, sometimes it is, but most times, you know, it's more like this and then back up and then down and then over here. You know, that's a trading range. And so sometimes at these edges, this is where you're looking for divergence, you're looking for failed range expansion, and then you're looking to snap it back up. Okay, so we'll keep an eye on the NQ as well. Let's look at the crude oil chart for a moment, and then we'll start scanning some opportunities. So here's crude oil. This is a daily time frame. Something we talked about throughout the week was just pay attention. Pay attention to that 42.49, 42.50. That's a big time level up there. Because if price comes into that zone, it's already been rejected before. We saw how that happened. And the expectation was that we would likely see another rejection again, at least short term, and that we may see a pullback into 38.86, which is the midpoint of this key range. And I think that's the very least. We could actually even see a little bit more rotation, perhaps all the way back down to retest these lows, and then perhaps we see price walk back up, because right now you see a very clearly defined trading range starting to emerge. I still believe that in the medium term sense, crude oil is bullish. You know, it's been a while since I've said how bullish I think crude oil has been, but ever since we trapped participants below these key lows here on this day, it's been a straight move up toward our targets. And then when you come back and form an impulse range low and form a higher low and kind of rally back toward highs, that's pretty strong. And so I believe that right now these participants perhaps are trapped. You're starting to mark up and create perhaps a new distribution above that range. And if we see a clean distribution state or price structure, that could imply a move higher, right? So I'm just kind of watching to see where this thing plays out. I think 35.20s here, 35.17, whatever that key level is. If price comes there, that's a great buy opportunity. I don't know if we get down there though. So the first one to watch is likely going to be somewhere in the 38s, because you got 38.86 here, you got 38.34 here, previous month's close. And if price comes into that area, it could be an area where bulls defend for an attempt to squeeze higher. And if you can squeeze through these highs right here, 42.50, I think there's a great shot to reach the next HVN above, and that's going to be 47.92. There's a great shot, I think. So that's going to be something to watch out for. And again, if we do break, here's the key range. That key range right there, that PivotBoss key range that we like to draw up, 35.24 up to 42.49, that forecasts a 100% expansion target into 49.74. So right there, we could be looking at a target into these 47 to 49. So that's pretty significant right there, especially for crude. A lot of things have to happen right before that happens, but and I think you're going to see weakness before we attempt those highs. So just know, I think that's the medium-term target, But I think short term, I think we rotate lower. How much farther down do we go? I don't know yet. We'll have to see and judge it as it goes. But I think the first target could be here for an attempt to squeeze. If not, the next target is clearly down here for an attempt to squeeze. So just a couple of thoughts with crude oil. On an intraday basis for crude oil, this one right here was pretty bearish throughout most of the day, and then it pretty much just formed kind of a base down on lows, a nice trading range between 40 and 40.67 for the most part. I found it interesting that once price dropped down to here, it kind of got stuck in the mud here and then popped above it and then held above that zone the rest of the time. So, you know, just something to keep an eye on right there. But 40 was important. Price got to 39.99 right on the button and returned. And we were watching that, just to see how it was going to play out off of S3. And at first it got so quiet you couldn't really tell what was going to happen, but we knew that this S3 band right here, after it had been significantly downward trending the first part of the session, then kind of the slope just started to kind of taper off, and then it actually started to trend a little higher here. We thought that was the best opportunity right here for price to bounce back to VWAP. And it was not pretty. It took a while, but it eventually got there. And, it's just, it can oftentimes be difficult to trade in this type of range down here when it gets pretty quiet and it's only moving in short bursts. But always nice to see that some of the key levels you look for are still in play and actually worked out nicely. So this one's going to be important. 40.67, big time level here. Above it could squeeze us right back to value. But holding below that area, especially 40.85, implies a little bit more weakness to the downside. 39.88, perhaps even below that. So we'll see how this plays out, but this wide range right here could spell for some early nice expansion opportunities next week. All right, let's take a look at some scans here. Okay, so here is Thinkorswim here. A couple of opportunities from last week. I'll try to see if I can remember which ones they were. No, this was from earlier in the week. This one turned out nice for those of you that are in the room. This is a signal we were looking at earlier in the week. Obviously, we had this accumulation phase, and we broke that phase to the upside and saw a nice move in that direction. The first major pullback likely to be defended. Watch for the rejection, and then our signal came in right here. And that's an outside buy reversal signal. So it's basically that signal right there. Outside buy reversal. And when we formed it, I mentioned that this right here, significant, lots of energy, and the burst was very nice. So the first pullback likely to be defended. And since we saw that signal, the idea was to defend somewhere here for a shot at squeezing. And so far, the last 2 days have done pretty decent. The expectation would likely be for more strength toward the secondary and rather the primary and secondary monthly targets. So if I bring up the load style here and go to ADR method, this is going to give us our targets based on average daily range. So based on average daily range right now, or really in this case average monthly range, if this is the low of the month, and that's the first trading day of the month right there, if that's the low of the month, then this is your primary target, 1340 for the month. This target is your secondary target at 1419, and that denotes a 100% move of average range over the last 10 months from this low. So that's something to keep in mind. There could be much more upside ahead for this issue. So right now the idea would be, obviously this was the zone to defend. You scale at this target, majority comes off here, and then you look to perhaps trail a leg, a quarter of your trade perhaps into that last target. So that's just a little idea here to watch out for as it plays out. Here we go. So this one is Oaks, O-A-K-S. And if you look at signals here, this is one we found last week. And this is the one where I thought we had a really good shot to see a great squeeze in. So last Friday during this after hours hangout, the one thing I mentioned here was that if price stays above the top of this range here, because right here we had an outside reversal signal. That's the signal that popped up on my scan right there. I liked where it was in the chart, which means it was basically the candle or the day where price was starting to break through the top of this ascending wedge. Ascending wedges tend to break to the upside, and so this one did. It broke to the upside, and we were looking for a continuation higher. And so the rest of the week we saw, or all throughout this week, we've seen strength for the most part on the way up. Now, it hasn't been significant, but that's all you could ever hope for, right? You see an opportunity, you think it's going to go up, and it goes up. Very nice. Now, there was a sell candidate. It was KANG. KANG. This one right here was our sell candidate from last week, and remember I talked about this major resistance up here. Important key level right here, 22.5, that comes across the highs. You can see how significant the rejections are time and time again. The idea was that price could reject again off that zone, given how the recent approach was rejected off that level recently. So you can see right here, price approached that level, got above 22.5 right here, and immediately rejected back below the previous month's high price and closed here. So once that happened, that was last Friday. I mentioned any pullbacks into this area could be selling opportunities for a continuation downward. Price never returned to that area this week. Instead, just held at lows and just chopped mostly below the close here. So this one, again, closed and held mostly below the low or below that Friday close, which is good. That's what you would want. But really didn't run away from anything just yet. And I'd be careful above 22s because that could offer another opportunity to retest and look for some sort of rejection. Okay, let's look for some more candidates here. I'm going to pull up, because I think that we could see rejections on these highs and perhaps sell off early next week. At least that's kind of the early idea. Then I can bring up some sell candidates. So what I'm going to do is I'm going to bring up a couple of wick reversal sell candidates and just kind of breeze through them real quick and see what we can find. So already this one's pretty nice. This is BEL, Belmond. It's a $9 stock. And right now they're showing some really clear resistance here. 980 is a very significant key level here. I'm going to go ahead and draw that up. So what I like to do is anytime I'm looking at a chart, I don't just look at the signal and say I'm going to go short that signal because it says short or it says sell. That's not how I operate. Usually, key level. What I like to do is if I see a signal like this pop up, I know exactly why that signal popped up, first of all, because I created it. And so I know exactly what it is. So I know the underlying mechanics of what's going into this signal. So I know it's a rejection signal. I know which criteria it fulfills and all that. But just because it says down and sell right here doesn't mean it's a great opportunity. You have to then further qualify the opportunity with what's going on in the charts. And ideally, if you're going to see a signal like this, you want that signal to be coupled with a razor sharp area of support or resistance, or be a pullback zone in a trending market. You want it to be aligned with a great area in the chart. And this one is 980, very, very clear area of resistance. Look at that. That's a doji reversal that formed off of it, sold off. And then look, sell signals in the direction of the move, money. This one, not money, because you're moving down, you're trending down, so you want to sell the signals on the way down. And then once you find rejection on these lows, then it's okay to start changing the other side, right? Up here, we smacked right into resistance and we formed a signal. That's great. So I would say a pullback into 950 to 960 offers an opportunity for bears to defend. So if the upcoming week price opens down below 950, 960 and rallies into that zone and starts to see a little weakness, that could be an area to sell it for a return to the previous month's low price. And the previous month's low is going to be 894. 894. So it's not a big move here, but it's a pretty decent opportunity here where you reject here off of the previous month's high. You close back below the previous month's close. Typically speaking, that opens a move back to the previous month's low with a shot at seeing new lows. So that's an opportunity I'll have on the radar here for the upcoming week. All right, let's see what else we have here. This is Cherokee. Again, another rejection candle. This one could be okay as well. Not bad. I wish there was a little bit more clear resistance, but I mean, that's about as clear as you get sometimes. You know, you drop here, you try to hold, you get back below, you reject. It's very clear bears are defending that 1820 zone. 1820 is very, very razor sharp here. 1816. Very clear area of resistance. Price closed back below the previous month's close after taking it offered here early in the month. Price dropped into the previous low, rallied back to the close, tried to hold above it, and then rejected. That was today, and closed well back below. That's a nice rejection signature there. And if price rallies back into the 1769 zone, up to as high as the previous month's close, you rally anywhere into this zone, it could be a selling opportunity for a retest back at the 1620s, followed by potential expansion into the next downside targets. If we take a look at the ADR targets here, so that's the ADR target. I'm going to bring up the bear targets. So here's the ADR bear targets. Now, based off of average monthly range, if this high is the high for the month, then based on averages, price can go all the way here based on how big this price range has been on a month-to-month basis. That's pretty significant. That tells us we've had some big-time movement in this chart, and it probably includes some of this gap and some of this action. So, you know, I don't know if we can make it all the way down here. So what I'll do is, let me bring up the weekly. The weekly might be the better option here. Well, we're going to be changing coming up soon. So let's look at monthly again. Well, right now, given average monthly range, I mean, you got to go with what's there. This is the high. If you reject, as we think we could, on this pullback into 1770, 1769, I think the first major target is going to be composite VPOC. That's 1630, with a shot to see a move at least into the 50% monthly expansion target, or ADR target, which is going to be the 1550 level. The primary is down here, and that's 1423, but that's a far cry away, but nothing to say we can't reach it. So this is CLY, and I brought up the PivotBoss PIMO method template here, or style. And something I noticed here, you got to be careful with this, but you had this rounded off pattern. You see a significant markup phase. I mean, very similar to gold, right? Now we saw in gold. Up here we see this little high and a pullback, but then it tried that high again and rejected today. That's today. So it tried itself, tried its hand above those highs, rejected. It's not super clear, but you know, you can see it's a little bit higher here. Where is that? Right here. And then on this current high, it's lower. So there is some bearish divergence already on those highs at play right now, based off of the indicator. The reason I mean you have to be careful is just because we've been in a significant swing, and I think that this rejection is going to lead to a quick move down that then leads to a reversal back up that starts to set the edge in the range. So I think that this is a short-term opportunity to fade it down, but once you get into the 59s, you might see it snap right back, and then now you have a trading range that you're working off of. So this is a short-term sell opportunity based on this high. I mean, we've been rallying pretty good here. So let me see what the ADR says. So if that's the high, let's look at the bear target here. So if this is the high of the month based off of ADR on a 10-month average range basis, then this would be your primary target right there, and that's 58.82. So that's a pretty good swing move. I think that could certainly happen. I mean, really quickly. Again, this is one that moves a little slowly, but that could be something here where you see a nice pushback. Once you reach some areas in here, that could be a zone where you snap back, and again, you start trading around this HVN and developing a range after the recent expansion. So I'm going to keep that one in the watch list as well. CLY. All right, let's keep on going here. I'm just going to flip through more of these here. This is not bad here. This is NVMI, Nova Measuring Instruments. Little rejection here, kind of gappy for me, but nice little candle here where it's showing perhaps a failure to see any acceptance up here. Price is smacked above, couldn't go, so boom, and now it's, could be headed back to 9s. So this is, this isn't one I would trade right here, but just because of what the chart looks like, but that doesn't mean it can't go and fulfill that target. Let's see what else we have. All right, just for kicks here, I'm going to take a look at some buy scans here. It can always give me a little bit of bias for the market if the sell candidates look better than the buy candidates, or if the buy candidates look better than the sell candidates. You can always tell which way the market's gearing up to go sometimes, because one will really look much better than the others. Nothing really there. All right, let's look at some extreme reversal setups. Let's see if we got any of those. This one's not bad. We got a big momentum move up here, right there. Try to get below the low, snap back in the opposite direction. Big high range day right here, greater than 125% of average daily range. Let me see here exactly what it was. Look at that. So you look down here on the indicator and you can see how big of a day that is. This red dot on top is 125% of average daily range. This little white line or gray line is average. This little red dot is 65%. So this is way up here. This is a 250+% of ADR day. We hadn't seen a whole lot of these this year, but typically speaking, there's something that happens, depending upon where it forms in the chart. But when you see a big event like this, usually it can be a rejection opportunity. So similar to up here. So you see it form here, big day like that. You see this little day that's red like this one, and then that leads to weakness back down. So that's the idea behind this, the rubber band trade. You stretch the rubber band on both ends, you let go of one end, and it snaps back in the other direction. So this is one here to keep an eye on. I think this is going to be the key level to watch, the previous month's high price, because if there's a failure to hold that level, I think that's when you start marking down to these targets. All right, let's see if we got some more here. Let's look at this is the outside sell reversal candidates. It's we've already got that one. Nothing really doing there. Yeah, these upside long candidates aren't looking the best right now. All right. Let us look at some wide-ranging scans. So this is what I like to do for some of the scans. I like to see, give me, what I'm asking it to do is say, hey, over the last 3 days, give me anything that's super wide in terms of range. The 3-day range is significantly higher than average. Give me that. Give me those stocks. Because what happens is you usually see such a big momentum move, and then the upcoming period of time, price usually snaps back. So that's something that I look for. So in this case right here, this is a 3-day range. So on the advanced ADR indicator here, I put it on 3 periods, and it shows you that the recent 3-day range is $7.14 of range over the last 3 days, and it's been averaging basically $3, $2 and change, somewhere like that, $2.50. So that's a major percentage increase. You can see that's just huge. You don't see moves like that. So in 3 days, we saw what took it basically 2 months to do. We saw 3 days down. So anytime you see a move like that, I'm looking to see how the upcoming session behaves, because if there's a rejection tail of some sort, you could be snapping it right back to value, or at least back to the midpoint of that range without breaking a sweat. So that's definitely something I'm going to be looking for. Additionally, if you look at this chart here, there's a little bit of a level here around 17s where there's a little bit of support in that zone. These participants got trapped, so I'm going to be watching it here, see how it behaves. This isn't a surefire buy candidate. This is just if you have a wide range like this, keep an eye on it, because it could easily snap right back. And it might need a day to build out first, and then you snap back after it, but this is definitely a candidate. So I'm going to keep this in the watch list here. It's a 1-day wonder, another one. Some big gaps here. Here's one. Man, that's a big old day. This one had been averaging $2 of range over a 3-day basis, and this one got 5.5 points of range. That could be a blow off top. I mean, anytime you see some move this significant, I mean, this is average right here. So if I draw this little line over here, that's the average size of the day, of a day, or a 3-day range. And this 3-day range just far surpasses it. Similar to this one, similar to this one. So anytime you see a big time blow off here, I'm always curious again. Watch to see what happens the upcoming day, because it could fade against you. So this one's not ready to go just yet, but it's one again to keep an eye on. Lastly, I'm going to go into a narrow day scan just to see what we have, because sometimes when you have a 3-day narrow range or a 5-day narrow range, you could see some very nice breakout opportunities here. See, this is what I really like to see. The movement of this issue is not the best, but or the basic personality here. But this is the previous month's high right there. So this is the PivotBoss Pivots, right? Those are the PivotBoss Pivots with more above and more below. This is the previous month's high price, and you can see the white line come across. So this is a 3-day narrow range scan. So it's looking for the last 3 days, and then it's measuring those 3 days to see how narrow they are according to average daily range. So on a 3-day average range basis, you can see it's below the bottom red dot. That means it's below 65% of average. And when you have that relationship, usually you see expansion afterwards. So you can come over here and you can see, okay, here's a day where it was by itself here. That's these 3 days, and then you can see expansion the upcoming day. Here's a 3-day range right here that was very narrow, and you can see expansion. So that's what we're looking for. Here's a 3-day range right here, and we see expansion. So what I like about this particular candidate is that that's the previous high, and it's forming a little box, this little 3-day range above the previous high. Typically speaking, that is a great indication that this thing is not going up, and in fact, you're probably coming back to support. So 46s could be in the cards here, from 52 to 46 in Apache, based off this narrow range scan and this pattern. So we got to watch 52s to see how that shakes out. But again, if price breaks back below this level here, I mean, it could be open season for a move right back down against the range. Few of these coiling up, but here's another one that looks very similar, SLV. This is a silver iShares ETF. So you can see the previous sessions or previous month's high prices right there, and look at prices forming a very narrow range. You look down here, you can see they're tightly coiled price action, and anytime you get below 65% of ADR, that's when you usually see expansion ahead. I mean, think right here. You see that very tightly coiled right here, and then here's the expansion volatility phase. So you never know what kind of move you're going to get out of these ranges. You don't know if you're going to get sometimes a false breakout move, but the early idea right now is that they're trying to hold it above the previous month's high. And if there's a failure, you come right back down to the previous month's close and fill that gap. So there could be a move all the way back down into the 1460s for this one. So I'm gonna keep an eye on that one. A couple of more, and I think this scan is done. This is another one that's very similar, racks. We've already got a couple that look like that, but very, very similar. And that's about it. All right. So that's pretty much it for the scans. We got a lot of candidates there to sort out. So hopefully there's some candidates there that we can all check out next week, and hopefully some of those start to work out in our favor. We'll see. Good looking stuff though. For those of you that are in Masters, we're going to start on Monday. So thanks a lot for hanging out this afternoon. Again, Masters starts Monday, so there's going to be a lot to get to next week, starting 3 p.m. Central next week. So because our Masters runs at 3 p.m. Monday through Friday, we may not be able to do these segments for the general public here for the next few weeks, but maybe I can open it up a little early or something like that and do like a last hour thing for those of you who are not a premium member or a Masters member. Also, just really quickly here, before I let you go, for those of you who are not Masters members, we do have the special offer here for you, which is basically our 6-week live training is coming up. You can go to pivotbossmasters.com/join, and that's going to give you a great look at the upcoming 6 weeks of training we have. We have a fantastic curriculum and itinerary ready to go here. Core training is going to be the next 2 weeks, so starting Monday, we're going to be going through our theory portion of core training, which includes some auction market theory, some foundational market concepts, market phases and structure, those types of things. And starting Tuesday, we're going to be talking about algorithmic and program analysis, price-based analysis, and then from there, we're just going to go through on the itinerary, going through order flow analysis, entry techniques, and all those different things, advanced trade management techniques. So a lot of great training coming up. It's going to be fantastic. Also, the proprietary training down here is going to be in the weeks that follow. This is going to be great. You already saw some of that right now when we talked about the PivotBoss Oscillator and some of the trades that uses the advanced ADR targets. So the ADR method targets, we saw a lot of that right now. ADR indicator, PivotBoss pivots. We even saw some PivotBoss bands and crude oil. So we saw all of these at work today. And again, we're going to do some great training on that over the next 6 weeks. So thank you all for those of you that signed up to Masters. Thank you all that are current, existing Masters members. And for those of you who are thinking about becoming a part of Masters, thank you for your consideration. And let me know if you have any questions regarding Masters and the upcoming training. Let's see, Ray, you have a question here. I've got great seats at the marathon finish line. My wife's new office overlooks it, so oh man, wow, that's awesome. So that's Monday, right? That's going to be fantastic. Well, good luck to everybody doing the marathon there. That's going to be a fantastic time. Have a great time. So everybody, thank you so much for hanging out, and we'll get back at it next week. So if we don't see you on Monday, Ray, we'll see you after that. But have fun, take care, everyone, and we'll see you soon.